Good morning and welcome to today's edition of Toggle's Daily Video Insights. Today we're going to take a look at why Nike could rise 8% over the coming weeks and months, mostly on the back of an interesting technical setup, but most importantly, as you have seen here, we're seeing another setup similar to what we had back in May and June, where there were a number of positive forces that Toggle was able to identify that were effectively exerting a bullish impact on the stock. And so recently, we've had the same thing. Looks like the stock recently has started a breakout, and most recent one is a bullish force that is of technical nature. So those of you who are not into technical analysis, you probably are not going to be as interested in looking at this. Nonetheless, worth paying attention to Nike as a stock. For the rest of you who do want to look at this, we'll go through the analysis as we normally do. In this case, what we actually see is that the stochastic K-D spread, which is really a good measure of whether or not a new trend has begun, has now crossed above zero. In the past, this was quite a bullish event for Nike. In fact, if we look at why it might move, you can see that this has been happening going back all the way to 2000. So it's actually a really, really compelling relationship here that should put this on the radar screen for anybody who is a fan of consumer discretionary stocks. Now, based on these other outcomes, the goal here is to, well, the central expectation is the stock remains somewhere within this confidence interval, and that within, let's say, 1 month to 3 months, it reaches 180.28. What you don't want to see is the stock to dip outside of the confidence interval, and certainly not below the 159.49, because presumably that suggests that there's actually some other kind of driver that is currently more important for the stock than everything that we've been highlighting, and certainly this driver in particular. Interestingly, there have been 25 similar occasions where this setup was present, and so there is quite a lot of data for Toggle to have looked at, which is why this insight has 7 stars. Looking at the past performance, also you can see that actually the vast majority of outcomes were very positive. In fact, in some cases, it reached as high as almost 20%. But very importantly, there was also a set of outcomes where we had almost a 20% loss in some of these cases. So there's a little bit of a barbell here that you need to pay attention to. Quality checklist, always a good one to check through, but basically the point is that here we didn't actually see necessarily this relationship hold through a variety of business cycles, meaning a number of recessions and expansions. But as you saw earlier, it does go back quite a lot in history, and it does have a number of episodes to study to give us the confidence and rating of 7 out of 8 stars. This much for Nike in today's Daily Insight. We are also, the daily brief, if you subscribe to it, should already be in your mailboxes. If you don't and would like to, please go to toggle.global. If you sign up for Toggle Copilot, which is the software we're using here, you can test drive it. And in addition, you'll receive a daily dose of market relevant, fresh content that hopefully is going to spark some interesting and potentially profitable ideas for you down the road. Otherwise, like this video or subscribe to the YouTube channel, and you'll be able to see more of these videos. We do that every market trading day. The goal is to really break down that barrier between an individual investor and the universe of fundamental data out there, and we try to help you map the changes in that data from earnings to analyst expectations to changes in technical analysis patterns, and how that might potentially impact the stocks that you care about, or actually also highlight stocks that you had not paid attention to but should be. Thanks for your attention. We'll see you again on Tuesday.